Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. What's up, everybody? It's Friday. It's the end of the week. We are here for the daily market commentary. The S&P is up 8 points today as we saw a little bit of a sell-off yesterday. But, I'm using that term sell-off very loosely as just like every other sell-off, it didn't last very long. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. It is our last week of the first month, so January is about to come to an end, and it's been, as like it was a few years ago, a banner January. So let's see what happens as we head into February. So as we're heading into the last part of the month, one thing I wanted to make a quick note of: we still have our Happy New Year 2020 promo. $20.20 for your first month. So if you are interested in learning more about joining our live trade rooms, go to TradersArmy.com, use promo code HNY2020, get 20% off your 20% off of any trading courses, and $20.20 for your first month. So go take a look if you are interested. We would love to have you join us. So today, we had some lines on from yesterday's live trade room. Speaking of our live trade rooms, as we caught a really nice breakdown yesterday, probably one of the better trades was this little breakdown we caught in the Russell, which came down and hit its first target, and then kind of continued its move before then rallying a bit higher. But I don't normally look at the Russell in the daily market commentary, but the Russell is one of them that we look at pretty regularly because it leads the other markets, right? It's like the canary in the coal mine because of the stocks that have a slightly higher beta. But we did have the S&P level, and we came. I mean, this is frustrating, right? When you've got a level down here at 3,300, and price comes to 3,300.75, right? So I mean, it just barely missed our entry by about a point. But then we got a nice move up coming off of that level. Now, one of the things that we talked about yesterday was the fact that, we are getting a little bit of weakness in our 4 hour. So if you're so inclined, there's a potential to get short on this area up here. Now everybody knows my rule. We don't spit into the wind. We don't tug on Superman's cape, and we don't short the all-time high. So at best, it's a confirmation entry. We'll take a look at what happened here. We came into the level, and then we did actually get a potential entry. So we come into the level, so we got an entry, 1, 2, 3, 4, 5, 6. After 6 candles, price had gone nowhere. So essentially, it gives you the opportunity to get out of the trade at break even, or, a tiny, maybe a half a point loss. But the point is that when the market does this inside of a zone, our next opportunity is for price to break out. And so now we're setting up for a potential upside breakout as we continue this movement. This area that could have been a resistance area is now acting as a bit of a support area. And so I think that there's still an opportunity here for a breakout up to this new all-time high. I am going to take this level here and remove it because we came so close to it, and it's such a small level that I don't think I'd want to lean on that particular area again. I'm a little bit better off with this little zone here if we come back to it. But that 3,300, we came a little too close without getting in. Same thing in the NASDAQ. Now, in the NASDAQ, we had the same area kind of identified, and it missed by just a few points. So I'm going to remove that one as well. And really, we're back to a brand new all-time high in the NASDAQ, so certainly you can take a breakout above the all-time high. Remember, that's always a possibility. Even though I may not mark it every single day, when you have an all-time high like this, I would much rather you take a breakout above an all-time high than try to short the all-time high, right? Because if you're shorting the all-time high, good luck. But if you're taking a breakout with the right setup, right, you got to have the consolidation and the basing, those will typically run for a few points, even if you're just looking for a day trade opportunity, right? Next would be crude oil. So in crude yesterday, we had a little breakdown in crude. That worked for a little 2-to-1 opportunity. And so, on that movement down, one of the things that we always try to do is utilize the update. So our update was that our CO broke down from today's room, also moved 2-to-1, reward to risk, time to move the stop down to lock in some profits. So this is why we have these updates in place so that we can adjust things, because look at what happens. We got our little move, and then it kind of chopped around and started to go sideways. Now, I still have a bearish sentiment on the position. I haven't changed my overall bearish sentiment on the position, and I still think the better probability is that we'll continue to head a bit lower. Looking at this yesterday, we're in a wider range on the daily chart of crude oil. That I think there's a chance, originally I thought we could get to 56. We made it down to 56, and we stalled a little bit at 56. The next stopping point, when you look at this on a bigger picture chart, would be price making it down to 54. Looking at gold. So in gold, we had a gold level set up yesterday as we got a little rally up in the gold markets right into our supply level. And then our supply level hit, and we got a really nice move away from our supply level yesterday. So those of you that got that gold trade, now we traded all the way to the top of the zone, which means we need to remove that zone. But if you got that trade yesterday, do me a favor, leave it in the comment section down below. Always great to hear about that, as that one worked for a nice little movement. And then one of the things that we had talked about in our trade room was an iron condor between gold, 1606 by 1539. We are heading into the weekend, but it is staying nice and tight between the wings of our condor. Aside from that, I don't really see any great trades today to kind of add to that position. Looking at our bonds and currency markets, he talked a little bit about the ZN yesterday, and the ZN, price. We had this area here where we thought we might see a little bit of a reversal. Price came down into this level, and then this is our talk track was potentially to look at a candle-to-candle opportunity in here. So we got a nice little move away, but this was in the overnight session. So my guess is most traders did not grab that opportunity. For that little tiny rally up on the small time frame. If you were trading the U.S. markets, you're probably not up at that time of day. Looking at this on a 4-hour chart, we can see that our bonds are in a clear uptrend, and we're seeing some buying pressure down here. So I don't have a really clean area to tell me where to get back in at this point. I could use a breakout as long as we start some basing sideways. But I don't know that I'd want to hold this one over the weekend without any quality levels to really lean on or throw myself to. This is really kind of the best structural level, but the time of day that it was formed is not going to be as effective. Looking at the Aussie, so in our Aussie level, we came into our demand zone that we had highlighted yesterday. This one was a little bit of a stop out, as it came below the level, and then it came actually below this pivot. So this one, unfortunately, was a quick stop out. Didn't wind up working overall. And so now our next move is for price to continue to come down. So I think that the next best leg is if we get some sort of a breakdown below here, and then that converts this to a confirmation entry. If we come down below. Actually, that was just an old line from a target. There we go. So that's a confirmation entry. If price makes it down into that region. In the Canadian dollar, so the Canadian dollar, we did get a breakdown in the Canadian. This trade worked out exceptionally well. For those of you that took that one, leave me in the comment section down below. It's good to know you guys caught that one. At this point, obviously, I'm going to take that level off and look to this area right here as our next opportunity inside of that euro level. And then the Canadian, I said the Canadian, I meant to say the euro earlier. The Canadian dollar, I had a potential breakdown. It did not come down to the breakdown area, but that breakdown area is still valid. So the euro level broke down. The Canadian dollar did not. Great British Pound, Japanese yen as our last two markets. Now the pound, we just barely popped above this pound area here in the last few minutes. But this does not qualify as a false breakout because we had no basing in front of the level. I need to have basing in front of the level for a level to qualify for some sort of a breakout, and that never occurred. We are coming back into this area here where we could see a bit of a reversal, so keep an eye on that zone. And then the Japanese yen, we stayed above our little tiny demand area, which we have right here. Be aware that, though, we certainly don't want to see basing into that level And I think we could even see a little breakdown into that level, especially based on this most recent price action. So keep an eye on that for a potential breakdown. So as we head into the weekend, we have we've always got potential for gap risk over a weekend. So if you've got any futures positions you're holding, just understand how to hedge those and what you can do. Thank you so much, everybody. I hope you have an amazing, amazing weekend, and I will be back on Monday morning. See ya.